Hello and welcome back, and now let's take a look at a few more examples of trap patterns. And this time we are not going to use Bollinger Bands, we will just focus on pure price and technical analysis, because at one point you will then be able to view the markets and view the dynamics behind the trap pattern and behind all the reversal moves in general without having to use the indicators and the other tools. So we will just focus on price action, local structures, local patterns, and we will analyze or get into the mindset how the average trader will approach a market and how then the trap can help us get into a trade where other people are losing money. So here we are in a range market. At first we just see up and downs, no clear trend structure here a little bit, but lots of back and forth, no real trend direction. And then here suddenly we start a very nice trend. The moving average here in the background is falling in the middle, so it's not going to help us as much. But then you can see here at the bottom, the price is rounding off here. Here at that point, we then stop making lower lows. You can see that price is just here, staying at this area. You can see that here, the swing high and the previous swing low. When we look a little bit to the left, we can see where we are in the overall picture. You can see a few support levels to the downside. The first one, the second swing low, and then here you can see we have an attempt to rally to the upside, which probably had tricked a lot of people into such a trade. At that point we were not able to take a trade because we don't have any structure here. We don't have a swing reversal because the moving average is not helping us, and so we are just staying out and waiting for a signal. And if you don't have a signal, if you don't get a trap pattern, then you will just stay out. There's nothing to trade for us. And we are not forcing a trade just because we see a market at a previous support level after a trend. But now we have two criteria already. We have the trend, we are at an important key area, and now in this case we see here this massive spike lower, one large red bar, then we immediately reverse to the upside here. We recover all the previous loss here in this next green bullish bar, and then the trend continues. So the people who are already long here, who have entered long here because they were anticipating a long reversal, where would they have their stop loss orders? Most would probably have their stop loss orders just here below this recent swing low, because that's what regular technical analysis teaches you. But if you are not in a trade, you can just observe what is happening here, and then you see such a spike. It is taking out all the stops here, and then it immediately reversed to the upside, which is a very textbook trap pattern, and then we started this rally. So you can see here, although we did not get an entry before that, there was no real swing pattern, the moving average was not helping us, and also we did not have any other local structure like head and shoulders or anything else. So we were just waiting, and then we saw the spike, and then this upside reversal followed. So that's a very interesting pattern here, and you will see that over and over again. And such a pattern is usually caused by a news event here, when you suddenly have such a huge injection of volatility. So that is also a way how we can use the trap pattern and the squeeze to get into news trading a little bit with this pattern. Then here another example of a news driven trap pattern. You can see price was moving here higher with this large trend here of the previous lows. There was no trend structure here. We're just moving higher without any real pullbacks, just a few little retracements, nothing serious. Then here at the top we were not able to get a reversal because this is not a trend structure we are usually looking for. We need at least multiple trend waves, or at least some type of a head and shoulder or any other local structure. So we are just standing aside, not doing anything. And then here this was again a news driven candle. You see the huge move up, which then immediately reversed on the same candle. You can see the candle closed all the way here lower. And let's just zoom out to see where we are. Here is a previous support level. Once we draw that, so you can see we had some reactions here at that level, here a little bit of a consolidation, and this time was the first time back into the level, so support turned into resistance at this point. A very interesting trap pattern here. We immediately fell back below the previous swing high, below this and also below this range here, below the moving average. So in this case, probably a lot of people were looking for this breakout here above the previous highs, a huge candle here once the news were announced. It looked like a breakout here, not only above the previous swing high, but also above the level. So many people were probably jumping on the long trade. And then once it reversed, everybody got squeezed. We fell back into the range. And then that's another way of trading a trap and trading such a squeeze pattern with such confluence levels. We can also use the trap pattern once we have a clear trend structure, but we don't find an entry with our swing reversal. So here you can see we were in an uptrend. The moving average was not respected as much here. And then here at the top, we are having something like a local structure. You can see that previous resistance turned into support, and then price was just here staying at such a market top. When we zoom out, we can see here's a previous swing point, very strong reaction point. Here as well, another interesting swing high. And then you can see here suddenly price is shooting up. At that point it was just probably looking like price was breaking out. And as reversal traders, we just stand aside. We are watching such a scenario. And although we don't have an impulsive recovery of the move, we don't see an immediate reversal with just one candle. We can see that price is recovering here all the previous gains. You can see when we zoom in, there are only red candles. We even then break below this area here. We hover around a little bit. We retested it again as support. You can see that resistance, support becomes resistance again. And there are multiple ways how you could have entered. The first one here, after we just broke the lows, and the later entry here after we retested it. That is also a pattern that we will explore in the re-entry module and the re-entry lesson. So this is a different type of pattern. You can see again how we can assume that probably a lot of people were looking here at the trend continuation, at the previous swing highs and swing lows, and then the reversal happened very quickly and everybody was squeezed. There is a lot of momentum here now to the downside and a high likelihood that the trend is going to continue. Then here we have a very similar structure. You can see we have a trend wave 1, 2, and then here the final one. And again, we don't have a reversal here at the top. You can see price is just hovering sideways in one consolidation here. You can see we are close to previous resistance areas. The first one, the second one, and then again very similar pattern. We just shoot up above the swing highs here, above the previous resistance. At that point it probably looked like a breakout where price was resuming its uptrend, but then here immediately reversed to the downside. You can see one large candle here is forming, and then the follow through again. There are multiple ways how you could have entered such a trade. The more risk seeking traders, they would just enter here once you see this large engulfing bar with this reversal. But if you want to wait a little bit more to get more information, any other candle here on the way down would also be a good entry. Then here, if we break below this trend line here, you can see that very interesting zone that we have here. We can even extend that back. So support, resistance, resistance, resistance becomes support again. And here then we break it, we come back into it, retested it, and then we sell off from it again. So there are multiple ways of re-entering or entering such a trade. And the most important part is that we have this context here of a violent breakout with an immediate fall back into the range with high momentum to the downside. And so again, this is not just a blueprint pattern, the trap, but it is a way of analyzing how traders view the markets, how they jump on an immediate breakout that is not confirmed. It immediately pulls back and falls back below the range. We have a lot of local structures here with the support and resistance, the highs and the lows. And then once we see such a pattern with the momentum accelerating to the downside, we see a break and a retest of such a structure, we can then get on such a trade, and there is a good profit opportunity to be made after such patterns. So here another type of market top with a squeeze, and you can see that they come in many different forms and shapes. And the goal here is that you learn as many market tops and reversals as you can, so that once you analyze a market and you come across a pattern, you will understand what it is telling you about buyers, about sellers, how people positioning themselves, and you can use that then to make your own trading decisions. So here we are in an uptrend again. We move into this market top, but then again we have a local structure. You can see that here, a big trend line cluster. We have multiple touches, and at no point is price able to break it. You can see that here we are making a lot of runs at it, but price is still always making higher highs, higher lows, higher lows, higher lows. At the same time we are making higher highs, so we are still technically in an uptrend. But then here we suddenly have this spike up here as well, a spike up. This the first time we don't reverse immediately. We spike up, we still keep grinding higher, we spike up again, but this time we are falling down, we are falling back, we are picking up downside momentum. And let's zoom out to see where we are. So there seems to be a very important resistance zone. Let's see if we can use that. So here we have support, and then the first time back in this level. Probably a lot of traders were looking at this, anticipating a short and a retest as resistance. So a lot of people were probably already short at that point. Where do they have their stop loss orders? Somewhere around the highs here, either here, or if they enter short after this pin bar, the stop loss will go here. But again, we have the third spike here to the upside, which then squeezes everybody who is prematurely short. Then we can see here the momentum to the downside is picking up here. When we zoom in, we can see we are moving down very strongly. We do see another bounce here, which at that point we are now making even a lower high. So it is all coming together. And then here we have the break of our local structure of our trend line with a very sudden injection of selling momentum here with this large candle. So you can see we don't get into the absolute top or the absolute bottom when we try to trade our reversals, but we always look for as much context as we can to then position ourselves for the best and the high probability trading opportunities. And you can see even though we get in a little bit late, we don't try to pick the top and the bottom. There is usually always still a good enough profit potential to be made, and at the same time we can increase our win rate by just waiting a little bit longer for additional confluence. And that's it for this video and for this module. I think by now you should have a good understanding what to look for in a trap or a squeeze pattern. You know how to find them with or without Bollinger Bands, what the characteristics are, and also what the trap pattern can tell you about the general market sentiment, how traders view the markets around key support and resistance areas, where they get into trades a little bit too early, where they then get squeezed. And we can then anticipate a reversal with the help of the trap pattern if we find local structure, trend lines, head and shoulders, support and resistance. And then we look for the momentum shift, where we then have a very strong momentum break of such a local structure. And in the later module, and once we look into re-entry opportunities, we will take this even a step further and get into the specifics and advanced concepts, how to trade the different patterns in a more professional and in a more advanced way.